Hello and welcome to the Out Exit podcast. I'm Ronald Skelton, your host, and today I'm here with Steve Divitkos. He's the founder of Mineola Search Partners, a firm that invests in search funds, the entrepreneurs who run them, and the companies they acquire. Thank you for being on the show, Steve, man. I appreciate you being here.
Yeah, thanks for having me.
Let's just get started. I know you were an entrepreneur before you got into what you're doing now. So let's do your origin story. Tell us how you got started into what you're doing now.
Yeah, I'm an investor in acquisition entrepreneurs now, but my background is being an acquisition entrepreneur myself. So coming straight out of undergrad, I worked in the private equity business for a couple of years, investing in much larger companies that I'm certainly now focused on. After doing that for a couple of years, I knew I wanted to do something entrepreneurial, but I wasn't sure exactly what form that would take. So I went off to business school for 2 years to try to figure that out. When I was there, I learned about this thing called a search fund, which we can talk more about. And it was a way for a single entrepreneur to search for, acquire, and then subsequently operate a single privately held business. And the more I learned about search funds and acquisition entrepreneurship more broadly, the more it struck me as a really interesting way to effectively connect where I had been as an investor and where I wanted to be as a CEO and entrepreneur and business builder. And the prospect of buying my way into an entrepreneurial career had never even really struck me as possible before. So almost immediately, the idea resonated. Um, in my second year of business school, I decided to raise a formal search fund from a number of investors across North America. And then shortly after graduation, formally commenced my search. So I searched for about 18 months and purchased a software company in late 2013. The software company was co founded by a father and son combination. They had been running the business since the mid 90s. So at that point, for about 20 years or so. And the father specifically was in his early 70s and was naturally looking to transition to other phases of his life. And it was really important to them. They were seeking liquidity for their business for a couple of years, but never quite found the right fit. They didn't like the idea of selling to a strategic buyer because, from an emotional perspective, which is very understandable, they didn't want their business to effectively be swallowed up and become unrecognizable only a few years after the acquisition. Nor were they particularly excited about selling to private equity, with all of the things that often tend to come with those types of acquisitions. So I kind of position myself, in a soundbite as a succession plan looking for a single business to succeed. And I think that kind of resonated with them. So, long story short, I bought the business from them in late 2013, ran it for 7 years as CEO, and then exited in late 2020.
At another meeting you and I had. And I guess this phrase or the whole thing of a search fund is a fairly recent thing. So, what is a search fund, and kind of tell us a little bit about what that is?
Sure. So maybe just to back up a little bit, the concept of a single entrepreneur looking to buy a business and then subsequently run that business, I mean, that's been around forever, right?
Right, right.
What a search fund is effectively like a more formalized structure to frame that endeavor. So, as I mentioned, a search fund refers to a vehicle where a entrepreneur, often in somewhere in their 20s or 30s, raises a pool of capital to help him or her search for a company to acquire and then ultimately become the CEO of and operate moving forward. So, in a search fund, the entrepreneur raises money in two rounds. The first round is pretty small. So, they raise a couple $100,000 to fund their 2 year search for a business. Usually that money goes towards paying their salary, office space, travel, etc. And so investors like me invest in that stage. What investors like me get in return for that is the opportunity to participate in financing round number two. Financing round number two is when the entrepreneur has actually identified the company in question that they wish to invest in, and we help them write the check for that company. The industries tend to be more service and technology oriented. They tend to be more frequently B2B than B2C. They tend to be in asset light types of businesses that don't require a lot of capital to scale. Um, And industry, I mean, there's a wide range of industries that tend to be targeted: B2B services, software, technology, healthcare, and several others. So in my case, I ran a software company, again, a very asset light business model with a lot of recurring revenue. And recurring revenue tends to be another widely seen characteristic because it lends itself quite well to a first time CEO running it. And maybe that's an appropriate kind of title page to put on it: is you're looking for both a business model and an industry that lends itself very well to a first time CEO. So what's an example that does not fit that description? Maybe like a mining company, for example. That would be like the antithesis of a search fund investment.
Are there search funders out there who, like, people that are putting together funds looking to buy companies that you would, maybe they've already sold the company or thing, or is it just primarily straight out of college?
No, it's all the above.
Okay.
Basically, any entrepreneur who is looking to purchase a business and subsequently assume the CEO role is totally fair game for a search fund. So it can be as kind of inexperienced as someone coming straight out of business school with maybe only a couple of years of work experience under their belt, and can go all the way to an entrepreneur who is in his or her 50s who has done this many times before and is looking to do it again. The median age at the start of a search is 32 years old, but there's a pretty wide standard deviation around that median. So any and all entrepreneurs who are, effectively looking to do this, there's certainly no recipe or formula that needs to be followed.
Kind of jokingly, they kind of know what they want to do when they grow up, so they kind of got an idea in what industry. Most people kind of have an idea what industry they'd like to play in. Do they put together a proposal, a document? Is there a pitch to you guys?
Yeah, so we'll take each round of financing in turn. So starting with the first round of financing, this is when the entrepreneur is just raising what's called search capital, which is exactly what it sounds like, the money to fund the search. So
Mhm.
at this point, the entrepreneur doesn't have a lot to go off of with respect to raising money. They can tell investors about themselves, what schools they went to, what jobs they had, why they want to do this, etc. Often, the document in question is called a PPM, or a private placement memorandum. That is effectively the only document that investors like me have to go off of when deciding whether or not to fund any entrepreneur search. Almost always, in any given PPM, um, one of two things will show itself with respect to industry. Option number one is, let's say an entrepreneur has a very, very specific industry thesis. Let's say he or she used to be the CFO at a sleep clinic, and they say, you know what, I love everything about the sleep clinic industry. I'm going to scour the earth and find one sleep clinic to buy and operate in the United States. That does happen.